No more real estate investing for me. I'm done. Completely done. My name is Sylvan J. Rahman. Welcome back to Intentional Wealth. In today's video, I'm going to talk about why I love real estate investing so much. I'm also going to talk about what type of returns I expect to get for my investment and why I quit real estate. Go ahead and subscribe to the channel and click the bell icon so you're notified every time we release new content. As most of you know, back in 2017, I decided to become a real estate investor with the specific intent of investing in real estate. Obviously, that is what a real estate investor does. They invest specifically in real estate and not much else. Fast forward a year later, I hadn't made any real estate investments. In fact, the first couple of deals that I did had nothing to do with real estate, but instead I invested in a line of coffee shops. Now, the whole thought process and reasoning behind investing in those coffee shops was that I could get bigger returns faster on my investment than on any other real estate deal available to me at the time. The intent was to use the proceeds from the coffee shop to invest in real estate and to slowly build a massive portfolio that would bring me passive income to fund my lifestyle and to slowly achieve the dream of financial independence. Now, there are three reasons why I love real estate investing. The first one being that there are multiple facets to real estate investing and multiple ways to get a deal done. Number two, there are multiple ways to get into a deal, whether you have a lot of money, little money, or no money. And yes, it is possible to invest in real estate with no money out of your own pocket, but it can be a little more difficult. Number three, there are multiple ways to get out of a real estate deal in a profitable manner. So the whole reasoning is that there are multiple ways of doing real estate. There are multiple ways to get into a deal and multiple ways to get out of a deal. And I just love having those multiple options. Thus, that is why I am so passionate about real estate. The number one question I get asked when people find out I'm a real estate investor is, hey, what type of returns can I expect in a real estate deal? It depends. And for me, it depends on four factors. The first one is, what type of investor do you want to be? Do you want to be an active investor or a passive investor? I myself, I'm a passive investor. My motto is much like the old info commercial for the Ronco rotisserie oven. Set it and forget it. Except mine is invest it and forget it. Except for that one time every month where I go ahead and check my accounts and make sure my returns have been deposited. The second thing is, what type of deal are we talking about? Are we talking about a fix and flip? Are we talking about a buy and hold? Or are we talking about just straight private lending? Now, for each one of those types of deals, you might have a different criteria set. I have a different criteria set for my fix and flips than I do on my buy and holds and my private lending. Number three, what is the level of risk that you can take on? And how much investment can you put into the deal? Can you take on a higher risk and put a lot of your money into the deal, or take a lower risk and put in little to no money into the deal? The general rule is the more money you put into the deal, the higher the returns you can expect. And the lower the amount of investment you put into the deal, the lower returns you can expect. That is the general rule, but it's not always the case. Number four, what is the type of returns that you want to see for yourself? It is something that you can set and you can stick to it. There is another Indian real estate investor that I follow that is on YouTube, and he expects to see a minimum of 8% returns on his investments. Now, that's good for him, but for me, it doesn't work. So what exactly are the returns that I expect? Well, if we're talking about a buy and hold or a private lending deal, I'm looking at a minimum of 10% returns. That means for every $1,000 that I invest into that type of deal, I'm looking for $100 profit at the end of the year. In the buy and hold situation, it means my principal, my interest, my taxes, my insurance, my maintenance, and my management have all been paid. And yes, you should account for management even if you think you can manage the property yourself. The reason I set my criteria at 10% is for two factors. One, there is a greater margin for error if I make a miscalculation. If I have miscalculated on my 10% return, I might not get my 10% return, but it probably is going to be higher than this other person's 8% return criteria. The other reason is because 10% just means more money. And who doesn't love more money? Now on the fix and flip type deals, I like to see a 200% return or double my money back depending on how long it's gonna take to do the deal. The longer the time it takes to do the fix and flip deal, the more money I want. But the minimum is usually 200% or double my money back. So if I've invested $20,000 into a fix and flip deal, I want to see $40,000 at the end of the deal. $20,000 being my capital and $20,000 being my profit. Now that you know why I love real estate and what type of returns I like to see, let's talk about why I quit real estate investing. But first, go ahead and like the video. It's true, I quit real estate investing. I'm done, at least for this year. In 2020, I have no plans to invest in real estate. Now, there might occasionally somehow be this magical deal of the decade and I might try and get into it, but as far as I can see, I have no plans to invest in real estate. If you've been following my channel and watching my videos, then you probably know the reason why. I personally think that real estate prices are artificially inflated. If we go back to January, then we know that we had the regular supply and demand issues that we see from time to time. We had a short supply of houses on the market, meaning sellers, and we had a high demand, meaning buyers, for those houses. And you had more demand for the houses available, increasing property values. Now rolling a little forward, and as the pandemic started to hit, we saw sellers take their houses off the market because they were scared of people spreading the virus that could come into their properties. And so people took their houses off the market, creating a higher demand for the short supply that was already there and increasing prices even further. Now roll into a little bit after the first quarter of this year and into the second quarter of this year, the Feds decided to drop the interest rates and finally dropped them to record low numbers. And in doing that, there were more buyers on the market suddenly because more people knew that they could afford more house for the money they had to spend, creating even a really high demand. This is really a seller's market. And for a real estate investor, it is true, there is no good time or bad time to invest in real estate, but I personally think that real estate prices are artificially inflated. Now, if you think that the economy is already taking an upward trend following stocks, then you're probably mistaken. Don't forget that this economy is right now being propped up on monopoly money, meaning money that the Feds printed from nowhere. Eventually, there is going to be a real estate crash, and that is just going to take time to come around. You will see a lot more supply on the market than there is for buyers. Now, people are always telling me, well, Sylvan, these interest rates, they're at record low numbers. You gotta get while the getting's good. Well, let me tell you something. I honestly don't think for 1 second that interest rates are going to move higher. At some point they will, but I do believe that interest rates are gonna stay low, and they're gonna stay low for the foreseeable future. Now, if they do move up, they're going to move up in an incremental manner, and it's not going to be something that's a huge difference. It's not going to break my wallet by paying a little more interest. I would rather pay a lower purchase price and a little more interest than overpay for a property and pay lower interest. And when real estate prices start to drop, if you've overpaid for a house, you might be in a negative equity position depending on how much down payment you've put down on the property. So if I'm not investing in real estate, what am I doing? Well, I'm hoarding. And I'm hoarding a lot of cash right now, as much cash as I can, because when it is time to invest, when the market has crashed, that is when this cash is going to go a lot further. Right now, with the cash that I have, I might be able to make 2 or 3 investments. But in the future, when the real estate market stops to crash, I might be able to make 4 to 6 investments. That's how much I think real estate might crash in the future, and I'm willing to hold on to my money. Even though I hate holding on to cash, I'm willing to do it because I would rather make a bigger profit later than a smaller profit now. If you like what you've seen here today, then go ahead and subscribe to the channel, like and share the video, and follow me on Facebook, Instagram, and Twitter. And we'll see you next week.